In this video, we're going to break down where we are in the S&P 500 year to date and what it looks like moving ahead, the different sectors, how they performed, the economic news coming out this week, where we are in the fear and greed index, really the market sentiment, and then we're going to break down individual stock option trades on the option trading platform. Should be a fun video for you here today. I appreciate you all for being here. One thing I ask, one thing only, smash that like button down below. If you want, you're welcome to subscribe as well. We're at an all-time high for subscribers. I appreciate each and every one of you. So let's jump into it. All right, guys, let's jump into the sector spiders and see how the market did last week. The last 5 days, everything was pretty much up, except it looks like for energy was pretty much flat, down 0.5%. But real estate was up big and pretty much everything. If we look year to date, again, most sectors are up. But consumer discretionary is down about 4.7%, energy down almost 5%, healthcare down. I like healthcare. We've got a stock coming up that we're going to cover in this video in healthcare. Tech is just about flat, so there's been a comeback in tech right now. Economic news for next week. We've got pretty much, it's the end of the week where we've got jobless claims coming out. We've actually got some PMI on Wednesday, and then jobless claims on Thursday, and the unemployment the unemployment rate on Friday. And keep in mind the fear and greed index is at 62 right now, so we're still in the greed range, but I do believe there's quite a bit of money on the sidelines. I think things really hinge upon the tariffs and the economy right now. I think inflation for the next 6 to 9 months is pretty much in check. And let's jump into the trades on the platform now. I'm not going to talk about every one of these that we have on in the option trading account, but I'm going to focus on the ones that I think are good plays for next week. If you see any that I'm skipping over, leave a comment down below and let me know your question or what you're thinking about the stock as well. But AI, they actually, if we look at the chart on AI, they're way down still. I should move this over here. And we can see we've got the 50-day moving average is the green. The 200 is the red. I like to see stocks trending up, and I like it when they're down and they've had like kind of a double bottom here. So there's room to move up. But when that 50 crosses the 200-day, that's a big bullish sign. And look over the last year where this has been. It's been way up at 45, so that's great. But I love this stock. It had a big move up last week, so I closed out one tranche. I've only got one on now. I've got one poor man's covered call. So deep in the money, leaps option, and then a short-term call that we sold against it. So after I closed that trade last week, I just left one on as a core position. And if we look at AI, the last 3 quarters, they've beat earnings solidly. And they've got rapid growth. They actually, there was a big 24% pop last week after the U.S. Air Force Rapid Sustainment Office expanded its C3 AI ceiling to $450 million through October 2029. So that's continued recurring business, a contract defense that's huge for them. And there was a 25% run up in the stock last week. And then it pulled back, but I'm going to look to put one back on once it pulls back a little bit more. It may come down this week. We'll see, but I'll look to add another tranche at that point. But I like C3 AI. AMD is the next one. This one is a great stock. We've talked about it many times. They're at 110, so it's been pretty flat last week, but I like the way on the chart where the 50 days coming up on the 200 day. It's kind of a reversal here, and it's trending up. Solid fundamentals. The high was, we're up here in the 180 range just back in October. This is the 1 year chart, guys, and I've got the Bollinger Band basically. So if we're in the middle or down below, I like that because down at the bottom, it means the stock is oversold. Up at the top, overbought in the short term. So I like to look at the short term and the long term as well as the fundamentals. but they've got great fundamentals. 27 PE. The big thing is they've got annual growth of 19%, 50% gross margins. So they've had 3 beats their last earnings. I think they're doing great. They've got the MI 350 and coming out this year, and then the MI 400 next year. So I don't know why this has been down. I think we can only pick good stocks and stay long term. And what I'm doing is I've got 3 leaps on and 1 short call against it. I had 2. I closed those out there was a pullback last week, and I closed my short call. So any move up, see, it was down 2% on Friday. Any move up, I'm going to throw back on 2 more short calls against these 2 leaps positions that are 292 days out. But I'll probably go in July and collect more premium. If you look right now where we're at in if you look in July, we can collect a short call against the 110. We can collect over $300, $3.35 for the 120 short call. So that's a $10 move up, almost a 10%. That's 8% up for the month, and we can collect $300 a month. So that's what I love about these poor man's cover calls. You can cover the cost of the leaps in less than 6 months in a lot of these stocks. So that's AMD, love it. Amazon is another great trade. It's a core position. It's at 205, had a little bit of a pullback. We're right at that 50, 200 day. Love it. I'm trading both sides. So I've got an iron condor on, which is the short put credit spread and short call credit spread. So anywhere within that range, if we go to curve mode, this is the Tasty Trade platform. You can check out in the link below. There's benefits if you go through my link, and you can see anywhere in this range. So I'm a little bit slanted to the upside, which is perfect because I think Amazon is lower than it should be. It's a matter of time. Again, it's the macro environment right now, but it could easily be a $250 stock later this year. So I like Amazon. All right, the next one. Next one we've got on. Let's see. What do I want to talk about next that I think is a great trade for next week? Actually, this is a new one. Cheesecake Factory. And I've got a leaps and a poor man's covered call. So I'm real bullish on a Cheesecake Factory right now. You look at their fundamentals here, financials. You can see the annually, the solid income statement, solid balance sheet. But look at the revenues and increasing year over year. And Cake is a solid stock. Let's look at the chart. It's up. The 50 is above the 200. We're kind of over bought right now. So there may be a short-term pullback. You might want to wait for a little bit of a pullback. But I actually pulled up. Let's see here on Yahoo Finance, and we can look. They've got a target of 55. I think it's going to be much higher than that, but so we're at the top end of the range. But the PE 17, so great PE. There's even a 2% dividend on this. So if you want to buy the stock outright, 100 shares is $5,500 versus the Leaps option is going to be like 20% that. So that's the benefit of buying Leaps. But if we go to the statistics, you can see the forward PE of 15, PEG ratio of 1.29, which is great. And then if you go to the analyst, you can see they beat earnings the last 3 times, and then they're growing revenue. Here's what's great. Cheesecake Factory is actually kind of a growth stock. Look at this, 11% expected growth next year. So, that's why I'm looking at this. And they want to open 20 to 25 restaurants next year or this year. And they should be able to push 30 to 40 next year is what my understanding is. And they're just a growth demon that's priced cheap. So that's why I'm going long in Cheesecake right now. And yeah, I've got it on. I put it on end of last week. All right, Coin is the next one. They had a little bit of a pullback. Crypto got hit last week. 246 is where it's at right now. Yeah, they got pulled back. It was up to 272, got pulled back, but I've got an iron condor on it, so it actually pulled back right in the middle of our range. So that's why, guys, I like trading both sides of the market, and I like to have a target in mind. But my target for coin is actually much higher, but it's going to take time. It moves up and down. Oh, you know what? No, my target's right at 250, so we're right at the target, thus the poor man's covered call. But that's the situation with coin. CRM. Let me know in the comments below, guys. Are you guys trading crypto? And hey, I appreciate all your comments. Everyone helps. It helps get the videos out. I'm trying to grow the channel, and it gets the videos out to more people. So any comments, questions, I really appreciate it. CRM, Salesforce, they beat on earnings last week, and the stock dropped a little. It's at 265. I've got a 260, 250 put spread, so I'm still in the green. You can see profit zone here. We're still above that. And that chart, it's been low. And, Mark Benioff is a great CEO. 6% down move last week. So that's why I threw on this. I actually added another tranche. So this is kind of like DCAing, dollar cost averaging. When there's a big move down, I'll add a little bit more. I'll add another tranche. So I sold another put spread, the 260, 265 with it at this levels. But they did acquire a company. They made an $8 billion acquisition of Informatica. So it raised concerns. Some of the investors are worried that this might change their focus, but I think he's done this a couple times before, so I'm not worried about that. What do we have next? Oh, did it again. All right. Next one, let's see. Next one is ELF, and this one, we've got a poor man's covered call. So we've got the LEAPS options, LEAPS plural. Long-term equity anticipation securities, and then we've sold a 120 call against it, and the stock's trading at 112 right now, but they've got 70. They're in that health and beauty, so they've got 70% gross margins. And I think this is an ideal time. I don't know. My kids, my girls, they knew about this acquisition, Hailey Bieber's company that was acquired. I'll talk about it in a second. But look at this big move up on that news last week of that acquisition. So they're up above the 200-day now, and that you can see that 50-day moving up. It's going to pop up there. But I did a little bit of looking into ELF and what that acquisition meant, because I'm not real familiar with it, but my girls are. They purchased Hailey Bieber's Rhode, RHODE, and Rhode is signed with Sephora, so now it's they're getting more. Well, that's retail, but the direct to consumer is huge because Rhode has 3.2 million followers on Instagram. So it's Instagram similar to TikTok. I'm sure they've got a lot of followers there as well. But this is guaranteed revenue that's going to come in for ELF. So I think it's really going to help. Their profit margins, as I mentioned, are incredible. I think it is going to do well going forward. The numbers for the short term during the acquisition may get a little messy, but I think long term, ELF is going to do great, and I love where the stock is priced at right now, and it's been up. You can see where it was. It was up at 219. So with the addition of Rhode, I see it moving right back up there pretty quickly. So what I've got on is just a put spread, small, $10 wide, and collect a third the width of the strike. Oh, no, I don't. That's a leap, so I'm betting a little bit bigger. So I like ELF long term. Next one, Google. Yeah, there's still huge growth ahead for Google. The chart shows this, to me, is a double bottom, and then we're right up at that 200-day. So I think Google is a huge buy right now. 17 PE. The PEG is 1. Price to sales is 5. 3 beats and on earnings the last 3 times. Buys ratings all around. They've got so many ways to make money. They've got YouTube, Gemini, Cloud, Waymo, Android, multiple revenue streams. I know that Congress was looking to possibly break them up. They're probably worth more if they're broken up. So I love Google here, and I've got a poor man's covered call. And as you can see, that's one of my favorite strategies. So let me know the strategies that you guys are using. Are you guys just doing stocks, or are you doing options and doing poor man's covered calls, put spreads? Let me know in the comments below. The next one that I think is a screaming buy right now, I've got 2. These are put spreads, and I'm still in June. The 700, 690, $10 wide, and the 715, 705. We're trading at 737 in Eli Lilly. You can see the profit zone there. Look at the extrinsic. We've got $524 left that is going to come in should we stay above in that profit zone over the next 19 days. Yeah, 19 days to expiration. So I'll take until I'm tested, until the stock price moves down and I'm really tested here at the short strikes. I won't really roll. I'll just let that $524 premium come in, and if I get tested, if there is a pullback, I'll just roll out to next month and collect more premium. So right now you can see it's been trending down, so that's why I like it long. I may add another tranche, but it also diversifies my portfolio because I've got a lot of tech and AI, and this is a drug stock, and they've got a huge pipeline as well, it's got a peg of 1.1 price to earnings to growth, but huge pipeline. David Ricks is a great CEO. They missed in Q1, but a lot of it was due to investments in equities. It's not really their robust operational growth, which they do have. So I looked at it as a buy opportunity, and Lilly's going to be back up there. All right, what do we have next? We're getting to the end here, so hang with me. Mara, Leaps option 14. We had a pullback, I believe. Let's see. So this is a crypto miner, and kind of a double bottom here, but this can, look where it can spike. There's a lot of room all the way up to 30. It's at 15, but I love the fact that you can collect good premiums. So if I was to put on another poor man's covered call right now, I've got 2 tranches on right now, so probably won't add to it at this point, but we can go to the trade page and then go table mode, and you can buy that $10 in September. Wow, we're out 474 days, so over a year, for $7.40. So half the price, so $740 versus $1,412 if you bought 100 shares outright. One contract controls 100 shares, but then you can sell against it in July. So it's 740, and then you can sell against it for $1. You could sell the 16.95 cents. So you can sell a dollar. So that pays off in 7 months. Not as good as I thought. I thought it was going to be under 6, but still, Mara's a good play. I like that play. All right. New one. Let's see. MDB. Let me know if you guys are trading this. This is new to me, but MongoDB, 180, 170 put spread. I was surprised because I'm not real familiar with it, but it's down here at fairly low levels, but high IV rank. So what am I looking to do? I'm looking to sell a put spread. So the leaps are great in either market because the lower IV gives you a good price on the leaps, and high IVs help when you're selling options. So that's why I'm with that 81, you can sell the 180, 170 put spread, or you can sell a 180 put as well. But the financials, I was really surprised. Look at the income statement, solid every year, increasing revenues, and then the assets and liabilities is incredible. The ratios, 70% margin, incredible. And what do? They're a developer data platform company and database integrated with a set of data services, and they're focused on multi-cloud data as a service. So specifically for AI-related data, and data is huge for AI. And they're a good sized company, 5,558 employees. And if you look on, where's my, pulled these guys up as well. Actually, Elf, go back.
Hi, fans.
There's my daughter. Hello, good morning. All right, let's see. Where did my MongoDB go? Oh, here it is. All right. 1 year 188, and 1 year target's 252. So huge room to move there. PE ratio, it doesn't talk about it here, but let's see. It doesn't, see if it has it here. Forward PE of 71. So that's the only deal, is the forward PE is a little bit high. But if you look at the last 3 quarters, they beat by 61 cents last quarter. So that's huge. And strong buys on buys. But I think the growth rate is really good. Yeah, 28% expected next year. So, hey, I'm giving it a shot. We'll see how we do in MongoDB. All right. And what do we got next? MRVL. MRVL had earnings last week, and it pulled back. It's at 60. I've got a put spread and then 2 leaps. So I sold my calls because it pulled back. I had calls against this, so they were profitable. That's why I like these poor man's covered calls. Any little pullback, you can go ahead and close those out. And then a stock like MRVL's gonna come back, but you can see that drop last week. Look where they are. They're down below. Double bottom, though. I don't think it can move much further down. We shall see. But these guys, it's actually a great company. Yeah, the reason for the drop last week, let's see. They beat on earnings, but they dropped last week due to a mixed reaction of its first quarter earnings report. Sales and earnings were in line roughly, but they reported shrinking free cash flow margin. So we got to keep an eye on that moving forward, but I'm not concerned about it. And they mostly guided in line. So I think analysts were expecting them to guide higher. But hey, any smart CEO is going to want to continue to beat. And if you look, they've been beating. So if we look at MRVL, 3 beats last 3 quarters, strong buys and buys, and growth estimate 77% this year. Unbelievable. How can it be down where it is with 77% growth and 27% expected next year? So to me, unbelievable buy opportunity. And I've got 2 leaps. And yeah, I sold my calls. So any move up next week, it was down 5.5% on earnings last week. So I'm going to sell those short calls on any move up against it. I always want to try and reduce my cost basis, even though my target is going to be much higher for a stock like MRVL. And actually, I'll tell you what that is. My target for MRVL is it's up there at 105. It's double where it's at right now. All right. Okay, guys, we're getting to the end here. What else do we have? I've got PayPal. Still a great buy right now. We've talked about this one before, but I've got 3 leaps, and then I closed out my calls against it on the down move last week. Like it right here, long, definitely. And get some others, other great buys for next week. TTD, I like. The trade desk down, but they've had a move up, and the 50's coming up on the 200. So I really like the chart with the trade desk right now. And they've beat the last 3 times, strong buy ratings, and it's been up. Yeah, look where it was. Huge room for growth. The beginning of the year, it was up at 124, but they were struggling with, they had some lower ad spend that was going, actually that's going on in the macro environment, and that hurt them. But they're a leader in e-commerce advertising, and with increased Congress rulings going forward, there's going to be more institutional buying. So they actually have this UID2, which is an upgrade to cookies. So they're going to, Congress is looking at taking away cookies for ads, and that's what a lot of advertisers use right now. But the trade desk utilizes UID2 and not cookies, so that's going to be a huge benefit for them moving forward. And like I said, super strong fundamentals. If we look at their financials, just look at that banger. All right. I think Upstart is the last one I was going to talk about, guys. Short calls against it, 2 leaps. Love the chart right here. All right, guys, be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. If you got something out of this video, be sure and watch this video here. It talks about 3 safe stocks that are dominating the market right now, and they're on sale. Thanks for watching. I'll see you in the next video.